Hi everyone, I'm going to be taking you through the tax liability activity today. Before I get started on computing the taxes due, the average tax rate, and the marginal tax rate, I'm just going to take you through the steps to compute the taxes due. And these steps are coming right from Chapter 3 PowerPoint on tax liability. Okay, the first step is we're going to want to find our tax bracket. Okay, and if you look at the table at the bottom of the page, we have all the different tax brackets. Okay. The second step is we're going to subtract the smallest amount from the taxable income to get your marginal income in that bracket. The smallest amount is usually these numbers, the left hand side number titled taxable income over. So we're going to subtract our taxable income less taxable income over. Okay. The third step is we're going to multiply that difference by the marginal tax rate. And all the marginal tax rates are highlighted on the bottom table below. After we do that, we add that amount to the amount to add, again highlighted in the table below. So add the amount to the amount to add from your tax bracket. Okay. So let's go through two examples. The first one I'm going to do is a taxable income of $60,000. Okay. So we know the taxable income is $60,000. First thing we're going to want to do is find our bracket. So whatever two numbers taxable income of $60,000 falls between. So I'm seeing between 50 and 75. It's over 60,000 is over 50,000, but is not over 75. So we're going to subtract the 60,000. 60,000 is going to be subtracted by the 50,000, and that's going to give us 10,000, and that's the marginal income. The marginal income is then going to be divided or multiplied by the marginal tax rate of 25%. So that's the tax rate in our bracket. So the 60 less the 50 multiplied by 25% gives us 2,500. Okay, that 2,500 is then going to be added to 7,500, the amount to add. Okay, so 2,500 plus 7,500 gives us taxes due of 10,000. Okay. Next, we have to compute the average tax rate, and all the average tax rate is the taxes due. So that's 10,000 in this case, divided by 60,000. The taxable income. Taxable income is 16. Taxable income 60,000. The average tax rate is 16.67%. Okay. And the marginal tax rate, that's simply the 25% we use in our bracket below. So it's highlighted 25%. Okay, that wasn't too bad. Let's try the 900,000 taxable income. Okay. So we're doing the same exact steps as we did for 60,000 taxable income. Always follow those same 4 steps. So, first thing we're going to want to do is find our taxable income bracket. So what is that 900,000 between? So it has to be over 335 but not over 10 million. That's the only bracket it falls into. So then that 900,000 less the 335,000 gives us 565,000. And that is our marginal income in the bracket. So the 565,000 is then multiplied by the marginal tax rate. Marginal tax rate in the bracket is 34%. Okay? So 34% times 565,000 is 192,100. Okay? And that is then added, so I'll write that down because this is a little more difficult than the 60,000. So 192,100 is going to be added to the amount to add for this bracket, which is 113,900. And that will give us a taxes due of 306,000. Okay. Finally, to compute our average tax rate, all we're going to do is take our taxes due of 306, divide that by 900,000, and that's going to be 34%. Finally, the marginal tax rate. We're just going to look at our marginal tax rate bracket, and that's the 34% as well. Okay? So I worked those two examples. Why don't you guys check out the next four? I hope you do well. Good luck.